Good morning, everyone. I am going to be your moderator for the session, Understanding the Implications of the Digital Divide on Women's Financial Inclusion. My name is Roshane Zafar, and I'm sure with all the wonderful panelists we have amongst us today, we will have a very scintillating and exciting discussion on this topic. This topic is, of course, very dear and near to my heart. But before I set the context, I would really want to introduce my panelists. We have with us today Mr. Mudassir Aqil, who has over 2 decades of experience in financial inclusion in Pakistan and has been the trendsetter in many digitalization and digital aspects in the industry in Pakistan. So we'd be looking forward to hearing from him. He is the CEO of Telenor Bank. So thank you, Mudassir, for joining us today. With us is also Mr. Khalid Kabir. Again, he has over 2.5 decades of experience in the microfinance sector in Pakistan and the Middle East. He is the CEO of Vitas Group, and we look forward to hearing and learning from his experiences across the Middle East in different microfinance markets. So welcome, Khalid. It's wonderful to have you here with us today. And then we have Maria Umar, who is with OneLoad, and she has been working on women's digital financial services space for a long time, and in promoting women's access to technology in particular. I've met her at several forums, and she brings with her a lot of knowledge on the importance of science and technology for women. Currently, she's working with OneLoad, which is an organization that is collaborating with Bill and Melinda Gates Foundation as well. So welcome, Maria. It's a pleasure to have you with us today. Before we go into the panel discussion, I'd like to set the context and share with you what the implications of the current space when we talk about women's digital access. What is the issue of a digital divide, and what does the context look like today? So if we look at, and this is data that's taken from the ITU. So if we look at the data coming globally, accessibility is no longer a constraint. In fact, access to internet has gone up over the past few years. And COVID, as I always say, every disaster has a silver lining. So when we see access to internet globally, it's increased over the past 3 or 4 years, and 65% of the global connectivity of population has access to internet. So at one level, access to internet is no longer the exception, it is becoming the norm. On the other side, when we look at mobile networks across the world, we have 4G connections up to 88% and 3G connections up to 7%. So most people have in the global arena have access to high-speed internet and mobile connectivity. The same goes for most countries of the world. The laggards, of course, Africa. In this case, if you look at, there's greater reliance on 3G networks. But generally, Asia and the rest of the world and in the developing world is also catching up with the developed world when it comes to accessibility. So that's a good trend. And we really need to see whether this trend will pan out into creating greater gender parity in terms of access to telephony and access to the internet. So that's the good news. However, affordability continues to be a concern. So if we look at the ITU data coming out from 2020, that's the latest data we have, and we compare that to the GNI, the general national income, gross national income per capita, we will see that in certain countries of the world, and this is Africa and some parts of Asia as well, the affordability factors, the red in this case, when we look at the map, is where affordability continues to be a major concern. And these are also the countries that tend to be laggards when it comes to access to internet and telephony. So again, affordability is a concern, and we will be asking Mudassir some key questions on this, because this continues to be a factor when it comes to gender parity. Because if you don't have access to resources and you don't have control over income, you will not be able to have opportunities when it comes to access to internet and digital financial services. The other side of it is, of course, that all of this manifests itself in terms of gender parity, which is a continuing divide. When we look at, in particular, the one thing that we're looking at here, and again, this is ITU data, is phone ownership. So if we look at phone ownership, we are seeing that there is a likelihood, less likelihood of women in many, many countries. And that's the light blue section in the map, and even the slightly darker blue section in the map, where women are less likely to have access to telephones as a mobile phone ownership as opposed to men. And we will look at some particular numbers as well to see where does this gender parity lie in terms of access to basic phones. So if we analyze the gender divide further, data tells us that there are 1.7 billion women in the developing world that do not own a mobile phone. Total, there are 2.9 billion people who don't have access to a mobile phone in the world. The majority of them are women. So again, lack of access becomes a critical point when we talk about the gender digital divide in terms of the global scene. 14% of women globally are less likely to own a mobile phone when compared to men. So that's the indicator that we view when it comes to a mobile phone ownership. Women are less likely to own the phone itself. And if you don't have access to the phone, obviously you're not going to be able to be linked on the digital space. Interestingly, and we'll talk a bit about Pakistan because this panel will be a little Pakistan-centric in terms of what the outcomes have been. Pakistan is unique because we have 186, almost 187 cellular connections. However, on the Inclusive Internet Index, which the Economic Intelligence Unit takes out every 2 years, we are at the bottom of the pyramid. Out of 120 countries, the country is at 90. So there is access, the point that I raised earlier. Access and connectivity is there, but inclusion is not there. And that's really the crux of the matter that we will try and address today. In the South Asia in particular, there's a huge gender digital divide. Women are 38% less likely to own a phone and 49% less likely to use mobile internet. So again, we are seeing that women are being sidelined or marginalized when it comes to access to the digital space. And yet, if we look at Pakistan, there has been a rapid perpetuation of social media users. Overall, 31% of the population has social media access. And if we break that down again by gender, there are 40 million Facebook users, of whom 19% are females. There are almost 72 million YouTube users, of whom 28% are females, and 13.7 Instagram users, of whom 34% are females, and about 18.2 million TikTok users, of whom 17.8% are females. So if we sort of calibrate the space, there has been rapid increase in access, but women's access is being left behind. So we really need to ask ourselves, what are the key drivers? Why is this perpetuation happening? Why are women being left behind? Another index to look at, what we've seen so far is basically data from access in terms of mobile telephony and internet. However, this then translates into financial inclusion for women. Because a lot of the change that has happened over the past 5 years has been on the digitalization and the branchless banking models in Pakistan. So when we look at Findex data, we see women are again being left behind, and there's been very little change in terms of access to financial services. Only 7% of women above 15 years have an account in Pakistan, as opposed to 21% of men, and so on and so forth. So what we are seeing here is that the rapid increase in many aspects of access and social media are not translating themselves into access to financial services. And that's the question we'd like to look into today. So what are some of the reasons why the gender digital divide exists? Generally, the model looks at 3 angles, and we will be again talking a bit about that. One is the economic divide, which is affordability, which we already talked about. The second is the empowerment divide, and this links up to all the cultural barriers that prevent women from accessing telephones, owning mobile phones, or using the internet. So that's another angle that needs to be considered. And the other side of it is the educational divide, which starts from whether science and technology are promoted in schools for women, going on to digital literacy, and going on to app use and so on and so forth, and the entire usability of the application and the language that and the human-centered notion of the applications that are available. So these are really the three key drivers that impact on the gender digital divide as seen the world over. Which one impacts more will depend on the cultural context. So I'm going to now stop my overall context setting, and I will move on to our panel. And I'm going to ask you a general question, which I will start with Mudassir, and we'll go down the line to Khalid and then Maria. What do you think have been some of the keys, one particular, let's not talk about all, but in your opinion, what is the one most significant development that has happened in the digital space, which has positively impacted on financial inclusion? So Mudassir, we'll start with you first.
Thank you, Rushana. Great to be here. And as you mentioned in your opening comments also, I think the biggest one factor that has had the largest impact, in my opinion, in the last 3 years has been actually COVID. It has had a profound impact on user behavior, and I think we have covered and made progress that we probably would have made in a decade in the last 2 years. But aside from COVID, I think the biggest enabler is access to mobile broadband and smartphones. And these are really the two things that I would highlight, in my opinion.
Thanks, Roshani. I'll speak about the Middle East, North Africa region. I would tend to agree with Mudassir. I think the most remarkable thing which we have seen is the adoption of technology and the evolution of the business models during COVID. Everything got accelerated. Now, even in Middle East, where the women divide numbers are perhaps the worst in the world, we see digital native NBFCs coming up. We are seeing competition coming up from very new quarters where we did not think. And I think everything, regarding digital disruption, which we thought is going to happen, just feels much more closer than it was before.
Okay, thank you, Khalid. Maria? Maria, can you unmute? Yeah, go ahead.
Yes. So I would agree with the gentleman. It's the same. I mean, COVID brought in, a lot of opportunities for digitalization at all levels, increasing the demand for direct-to-consumer services. And these have demonstrated the need for more empathetic interventions where the customer is placed at the center. So whether it's the language, whether it's the chat versus AI versus, customer service, plus the suite of services provided by the businesses, they're all being, optimized for the end consumer.
Thank you, Maria. So Maria, I'm going to pick up a point from what you just said about empathy and being more gender-centric in terms of the applications that we have. So in your opinion, I shared a very sort of basic model on why there is a digital divide. And one of the factors is the empowerment and the culture side. A lot of research that I've seen recently talks about patriarchy and the fact that women's access to internet or smartphones is looked down upon because that gives them more access to other social networks, or it opens up their avenues. So in your opinion, how have you, in your work where you were trying to set up women agents, how have you addressed this concern? And what are some of the examples of the best practices that have come up in your work?
So at OneLoad, we have made several attempts to, sign up female retailers. These go from, something like door-to-door efforts, which, as we try to create these mobile female agents who, as the name suggests, went door-to-door selling the OneLoad services, which is basically a financial aggregator. So, easy loads and easy pesa and to, returnable payments, etc. But, and we engaged students, but it did not yield much, the desired outcome because the effort to visit individual homes was far more, time intensive than the financial returns. Then we try to, use our traditional sales team and send them to, target these salons or beauty parlors in these low-income neighborhoods. Again, we met with a challenge that, first there was a cultural constraint. The women were not so open to meeting with the men. Even if they got a step into the door, it was very difficult for them to understand the business model because they had never tried it before. So the sales team, they were kind of discouraged by that. So we did have a lot of, interesting insights come out of it. For example, female agents were better suited to serve female retailers. Also that the male agents could then could train these female agents, and also that male agents can also convert, these female retailers, but it just took a lot more effort. So these experiments, they enable us to find new strategies based on our learning. So now we are working on creating this team of female, agents only. But there are lots of hurdles here. For example, the women that we approach through different organizations, even Salman Sufi Foundation that works on mobility, access to mobility. The challenge is that they are more interested in either office-based jobs or in, these courier and delivery service jobs, because where they don't have to make the end sale. And, there are various reasons. Of course, there are cultural constraints, and, people are not so open yet to seeing women on bikes in these very high density population areas. And then there's also the issue of transportation. They don't own any or, have access to it easily. So now we are working with, creating a hybrid team where we see, these female agents serving in areas where people are more conservative and they're more open to allowing women to interact with their women. And in other areas where then, sending in our traditional sales team where, we identify these hot pockets for female retailers that can be targeted. So we have this two-pronged strategy.
Okay, so what are some of the best practices you've seen where you've been able to pull in the female agents? Because if you look at the landscape in Pakistan, we have about 500,000 agents, of whom 250,000 are active. And we have less than 1% who are women. So why is it that this space is seen as essentially a male-dominated, sector or segment, rather than providing an opportunity to women as well? What are some of the, lessons that you've learned from this?
So one was changing the incentive package. So if we expect the female agents to work on the same kind of, KPIs that is given to the male agents, that's just, setting yourself up for failure. So their KPIs are much easier. For example, for the male agent, we'll say you have to hit at least 30 retailers during the week. For the female, it would be 10 to 12. Also, another thing we have done is we have set up these shop-in-shops. For example, setting up a booth in a pharmacy, and we have hired female agents to kind of sit at these and serve through these shop-in-shop model. Another thing that we are still working on is finding a way to provide them with kind of, a conveyance, a transportation service, because that is something that we have seen works. For example, if you go to these big general stores or grocery stores, you see women standing at these shelves, selling these products. So the one thing that those companies are doing right is providing them with transportation service. So that is another thing we're looking into.
Okay, thank you, Maria. So, Mudassir, I have a general question from you, which is a little provocative. Do you think technology enough, will it deliver on the digital divide? What's your experience?
No, absolutely not. I mean, I was fascinated listening to, what Maria was sharing with us, all the different experimentation that she's been doing. And, we have worked together in the past also. We've been trying to crack this problem for a very long time. And I think the triangle that you showed, the most difficult side of it is the empowerment divide. I think you can probably throw resources at the other two sides and make some headway, but the empowerment problem is so deep-rooted with cultural norms and all kinds of different problems that it will take time. And I think this is what really worries us, and this is what really stops us from making progress, because there is this tension between, you want to do the right thing, you want to make an impact and, promote women and financial inclusion for women. And then on the other side, you have a commercial responsibility also to make a positive business case and, at the end of the day, make a profit. And I think this is where always invariably the business case for allocating resources to women financial inclusion loses out. because, it's a chicken and egg problem in a country like Pakistan, male dominated cash economy, where the money is in the hands of men-centric markets. And if you want to scale your business, this is sort of, you gravitate towards that automatically. And then you do these experiments. And then when you don't yield commercially viable results, you sort of like go back to your mainstream. So I think that's it's a very, very difficult problem, frankly.
Yes.
Yeah.
So Mudassir, you've highlighted a very important point, which is, we have to create the business case for investing in women's digital access. So what are the kind of incentives that can be built in a program to enhance women's access, in your opinion, to counter this, number one? And number two, what is the technology stack? One of the things that one hears from Telenor is that you're investing on a platform approach. So building a technology stack that actually aggregates or integrates with all different players. So how will that help? Will that be one way forward for us? Can that help us get more women in an affordable and a profitable way? What's your take on that?
Absolutely. So I'll answer the second part of the question first, which is easier. The first one is more difficult. So I think the technology side of it is the easy part, and we have done quite a bit here, I think, which can be leveraged by other players. So I'll try to explain. So the payment business is actually, for a lack of better term, if you think about it, is really an engagement tool, right? Because people need to transact on a daily basis. So payment is a very highly engaging use case. And we are predominantly at our core a payment platform. A digital payment platform. We are a fintech with a banking license, but essentially a payment platform. And then everything else, all the other new value is added secondary after that. So, so in Pakistan, the advantage we have is that roughly 1 in 4 Pakistani adult, out of every 4 Pakistani adult is a registered EasyPaisa user. 1 in 12 is an active user. So we use this in a platform model by allowing other parties to actually come on top of us. So we have an open API platform. So people can come and in a sandbox environment, test it out. And when they're ready, we can just, switch it on and they're integrated. This is just like OneLoad is integrated with us. We have actually have close to 1,200 integrations. It's a very large platform open to the entire Pakistan ecosystem. And we have realized that in this process, we have sort of become inadvertently like a last mile delivery pipeline in many ways as well. So what we really want to do is to not create a walled garden, rather than open ourselves up in a sort of like a win-win principle where everybody can come and join forces with us, and we can generate more traffic on the platform, and all the new use cases can become part of the EasyPaisa platform. So, and then what we try to do is to encourage all of our partners to design the products which actually mimic the needs for a common Pakistani and their existing behavior. So just to give one quick example, one saving product that we are working on is a fractional saving product for women where they can save in gold. So, because this is actually what they like to do in their real life. So if a woman wants to save 100 rupee a day worth of gold, they can do that digitally, right? So, and we're not doing this ourselves. We are doing this in partnership with another company that actually does it. We're just bringing them on top of our platform and exposing them to our 11 million users. So that's where the platform model comes into play. But in terms of what can be done, the first part of your question, I think that's very complicated. We certainly have not figured it out. On our platform, the number of women users is actually much higher than Pakistan's financial inclusion for women, which is little over 20%. But still, we have long ways to go. And the problem that we come up against, exactly as you mentioned in your intro, that half of the women in Pakistan don't have a SIM in their name or access to a mobile phone. So that becomes such a big problem that we can't solve on our own.
Thank you, Mudassir. That was very exciting, and we'll come right back to you with another question. Khalid, I'm going to ask you a question on your experience of working in such a diverse set of markets in the Middle East. And you did mention that the digital divide in the Middle East is much greater. But one of the very innovative things that you've been doing are the specialized hubs for technology that you are setting up. And if you can just elucidate a little bit more on how these were, what the experience of this has been, and how this has enabled you to overcome some of the gaps in digital literacy and the Empowerment Index for Women.
Thank you, Roshani. I mean, we work in 5 countries. Some of them are, very difficult socioeconomically and politically as well, including West Bank, Gaza, and Iraq. The interesting thing, I mean, there are 3 silver linings which we see while we set up these technology innovation hubs. Number one is that technology works better in a broken legacy infrastructure. So, for example, a place like Iraq, where the banking system does not work, there are no courier services, the infrastructure that just doesn't exist, that the adoption of digital technology has leapfrogged. I mean, some of the numbers which we see from Iraq are counterintuitive, that the adoption of or using the technology to do a commerce transaction online is perhaps highest in the region. This is number one. Number two, what we are seeing is that we can look at digitization in 2 ways, and we decided on it very early on before we set up these labs. Number one was there are these existing legacy market segments, which we work with. And the question was, should we bring them into the digital space? Should we have a push on towards that or not? The second segment, which we saw is coming for the future, is the new generation, the millennials and the Z. And they are already digital. So I think there are different approaches towards these 2 segments. And deliberately, we are going to focus only on the new segment for now, because it's just easy to bring them. They are already there. Their pace of adoption is much more. So the way we do it is that we had to segregate our traditional business model from the innovation hubs, because we tried it, inside the companies, and it just bogs it down. The buy-in is not there. The understanding is not there. I think the buy-in comes later for other reasons, but the understanding, there's a huge U-shaped unlearning and relearning curve. Every existing business has to go to a traditional lender like ourselves. So what we did was we established a lab outside these legacy businesses. And the way lab works is, it is empowered to take decisions. It has its own budget. So what it does, it goes out and finds a partner which is interested in working with us, whereby we offer lending as a service to this partner. We can hook up with their platform. We can push some of the products which we have been working on through these platforms. I'll give you one example. There is the delivery as a service platform in Lebanon, now expanding in Iraq. And during COVID, the main problem in Lebanon, and because of COVID and their own political turmoil which they are going through, the supplier credit just dried up completely. So we were able to push some of the embedded finance products to their merchants on their platform. And interestingly, the first batch of clients which came in were more women. And here is the reason why. What we realized was that the access to information to them was, is much worse off than men. They could not go out and shop around as to how to figure out the credit part. They could not go to a wholesaler and figure out, how to bring the goods back to their shop. So while there was a digital order aggregator and wholesaler, you can say, and we were able to push the financing product, she took the loan. What we also realize is that during this phase, one of the learning is that the product design has to be absolutely different in this in this approach. For example, this client has taken 9 loans from us in 7 months. So in a traditional model, you can't think of doing that. Now what we are trying to do is, after testing this, now we feel that these hubs have to be localized, because each country context is different. So, we in the coming year, our target is to establish these small labs within these organizations, insulate them from the legacy infrastructure. Their role will be to identify a partner, design the product, design the workflows, test it out, do the pilot, then come up with the tech requirements, Once the tech requirements are done, then they hand it over to the business as a product.
So Khalid, coming back to the question that we had talked about earlier, I mean, these are great innovations. They work in a lab environment, if I understand you correctly. So what are some of the, the challenges when it comes to scale and when it comes to making them viable and profitable? So what is your thinking around that? Because a lot of us are experimenting, which is a good thing, but how do we scale that up? And that's what my next question to you would be.
So, I mean, first of all, we haven't gotten there. I mean, where we stand now is with the oldest partner. I mean, we are also experimenting with multiple partners at the same time. But we were able to, based on one of those experiments, we were able to come up with a business case. So we took the data of 4,000 merchants on that platform, and the products which we pushed out, we segmented the data, and we ran some numbers. And what we realized was two things. Number one is that embedded finance is just one product. It is a different way of acquiring a client through a platform approach, and you can give a product as a service. And each client, as it happens even in traditional market, they have multiple needs. So, there is a huge opportunity of cross-selling, and there is a need, consumption, perhaps insurance through the platform. One. The second thing which we saw in the business case is that it is very profitable. I mean, this is the passive income for the partner which they can get. I think the biggest challenge is, there are two challenges, which we are facing. Number one is the tech stack has to be ready at the back end to do this. And, we are 15 to 20 years old. We have around 15, 20 years old companies, and legacy comes in all shapes and forms, sizes across the organization, including tech. So we are investing on a tech stack. And one of the problems which we are seeing is the difference between the pace of evolution of our own tech stack versus where the partner sits. The second is more human. I think we also have to test this. We are trying to push it. When the traditional business will it adapt it or not? And I think so far what we are seeing is that perhaps most likely than not, we will have to have a second line of business. So this business segment will have its own governance. It will be within the organization, but it will have its own KPIs. Different way of growing the business. But it has to be demonstrated. And this is one of the things which we will try to do this year.
So the balance between the vision and the mission and the the financial outcomes has to be there if you really want to make this work. So thank you for that, Khalid. I'm going to come back to you, Mudassir, before I head out to Maria again. One question we just had from the audience, which was also in my set of questions for you. If we look at the overall branchless banking today in Pakistan, and we speak to the state bank, they will give you a very positive outlook when it comes to financial inclusion for women. When we look at the numbers, it says 66% of the funds that are transferred through throughput out of the branchless banking agents is for BISP, which goes to women. So what they're saying is that this is empowering women and this money is going to women. So that's one question we need to ask ourselves. Is this really empowering women? Is this really the outcome we expect? On the other hand, 25% of the branchless banking accounts are opened by women. So when we look at that number juxtaposed with what Findex is saying, where not even 7% of your women are banked in terms of the formal sector, this raises another question mark for us. Is this really is this a space for complacency or not? And then the last point on this is when it comes to using this as a financial inclusion matrix, the average deposit size in the branchless banking accounts is less than $3. So keeping all of this in the background, what is your view? Are we really moving towards financial inclusion in Pakistan if we look at this data? If not, what more do we need to do?
I think, Rushane, it's a difficult question, and you've covered a lot of ground in it. So I'll try to answer it in pieces. So the first part is the G2P piece, that can we use it more efficiently for better outcomes? And I think we absolutely can. And I think this is where from the government, there is a longer term view needs to be taken from a policy perspective, rather than, when there's a crisis like COVID or floods or something, and you need to just get the money in the hands of the people as soon as possible. All of these, long-term thinking takes backseat, and a higher emphasis on, getting the physical cash in the hands of people. So what the practitioners in the industry are doing, including EasyPaisa and other partner organizations as well, they route the money through mobile wallets. But essentially, it's just a pipe, and the beneficiary ends up taking the cash out. And they actually don't really ever understand, how to actually use the wallet and what else it can do, and they can save in it, et cetera, et cetera. So yes, in KPIs and metrics and reports, it does show up as if women are getting money through mobile wallets. But when you look at actual use cases and, transaction throughput, you will not see much improvement over there. So that's correct. And I think this is where we have unsuccessfully made this case to the government and to this program also, that how a longer term engagement and partnership is needed to make progress on this. And I'm sorry, I forgot the second part of the question.
So I was basically asking in terms of, is this the, I mean, can we be complacent with this data? If not, then what more do we need to do?
Yeah, so absolutely. So what really needs to be done is, for instance, I'll give you an example. During the COVID time, one of the proposals that we gave to the government was that we can join hands with other, financial institutions, and we can do a pilot. Let's say pick a district where we will convert every single retailer into that they will accept payments from mobile wallets. And when the money is being disbursed over there, then we encourage people to actually use that money by, buying groceries or whatever they use that money for, instead of using cash. And we will make that completely zero cost to the end user. And so there is some long-term thinking which is required. There was no appetite for it because obviously the pressure of short-term relief was such intense on the government that, all of these long-term thinking really takes a back seat. But this is such a deep-rooted problem. This will require, a longer-term thinking here, which is missing at the moment. But on our own, what we end up doing is that we then look for the most likely segment among women who can actually adopt digital payments. Right? These are the ones who tend to be a little more educated, have access to a smartphone and mobile broadband, and we have made significant headway over there. But really, Pakistan is a large country, and low-income, women, non-working women is really the problem that we need to crack.
Okay, so just very quickly, if I was to ask you, if we were to get women to save, because all these accounts exist, what are the two things we could do to get the women to save? So we have 25% of branches banking accounts that are women-centric. How do we get them to save? What are some of the challenges?
So couple of things. One thing that we need to do is to develop a model where a woman does not need to have her own device and her own SIM. Right? So when you actually go to these households, they are actually sharing a device. So, right. So a woman should be able to save not on a shared device. That's one thing. The second thing that Maria was saying, that community-based mobilization of agents is needed, where women who live in that community know each other, are mobilizing the savings together using the digital railroads. So players like us can actually provide all of these. This plumbing is already in place. We can very easily enable this. And this is exactly where the platform model comes into play, where we join hands with community organizations and other players who can innovate on top of us, who know the community better.
So exactly what Maria was saying is the human element. It's the trust factor. It's the feel-good factor that will get women into the financial inclusion space. So Maria, I have a question for you. One of the drivers these days is with the branchless banking model is that the brick and mortar approach to financial services is, something of the past. What do you think if that begins to happen, if we move away from the branch-led model to the branchless model? How will this impact on women's financial inclusion? And what are some of the pitfalls that we need to be aware of given your experience?
Yeah, so you see, what is the goal for FinTech? Basically, it is poverty alleviation and, financial inclusion. When we talk about women, we always give these very, these stats, very encouraging stats. 75% have access. but do they have ownership? What does that access look like? So one of the problems we face when we go into the field, talk to these women is, yes, I do have a smartphone. Yes, I know how to use it, but my husband takes it in the morning. He brings it back when he comes in the evening. And at that time, my children want to use it. So what time does it leave for me? And also data costs. So they're unable to afford that kind of data, and what they use it on your entertainment services rather than on, say, being more inclusive and looking up, how to be, empowered, financially empowered. So that is something we need to look into. Also, so coming to the question with the pandemic, what we have seen is, this rapid digital growth, and we are going towards, this digital state because we have amplified that, argument that digital is safer, it's cheaper, it's faster. But then this digital state that we are going towards, is it inclusive? What does it look like for the women? So unless every person has a smartphone, and unless every area, rural or urban, whether it's Balochistan or the northern areas or the merged districts, unless they have access to internet, broadband speed internet, true inclusion is not going to happen. Even with the financial inclusion, interventions that we are making, all these different fintechs that are coming up and doing wonderful work. Having said that, we really need to, look towards social enterprises here. There's a large room for them to come in and, work on that principle of doing good and doing business. So I truly believe that there's a convergence here of, the development sector, the private sector, the government, for all of them to, come together and speak the same language, share resources and lessons, and, really try to find, that sweet spot where we can say that, yes, we have finally gotten the, magic ingredient to that, to the problem. So this is the only way we can, achieve the SDGs around, gender equality and economic growth.
Okay, great. Thank you, Mari. So you hit upon a very important part, which is geography. Geography matters in access to digital solutions. So Khalid, I'm going to come over to you because you're dealing with a lot of widespread types of countries and geographies. But the question that I have for you is, one side we're talking about digital financial inclusion, on the other side there is digital money. Unless all of this comes together, unless we're able to pay digitally, the digital financial inclusion is not going to happen either, because the value of the digital money is the parameter that will determine the growth of digital financial services. I mean, that's just a very broad-based comment. But what do you think are the kind of regulations that are needed? And since you have a very broad-based approach in different countries, what is the regulation that's needed to speed up the aspect of digital money and digitalization in the financial services?
I mean, the countries where we work, I mean, most of them have the baseline regulation for mobile money. Just like Pakistan, they allow digital wallets to be rolled out by certain players, including telcos. In some cases, they go out of telcos as well. They have regulations, even a country like Iraq, they have regulations that a mobile wallet operator can actually lend money as well. So they can have their own balance sheet and lend on top of the data. I think you are right. The payment becomes the base infrastructure for any kind of vertical which we want to bring in. And we have seen regulations, which are traditional regulations, which are everywhere on the payment. What we see is that, payment is only the base. The regulations required are on top of it. I mean, I'll give you one example, digital signature law or digital invoicing law for that matter. If that is not there, no private sector player, a platform will come into that country and, start working on that. But the law itself doesn't, it's just a law, it's a good first step. And then comes the infrastructure to execute that law. Digital signature law is present, I think, in Pakistan also. They had to issue some instructions, as far as I remember, but that never got done. In case of Iraq, we have digital signature law, but there is no infrastructure. So I think law is a good first step, and then will come the players who will do infrastructure. What we see is a more a different kind of tangent as well. Now in the development sector, there is a use of Web3 and crypto coming in. stable coins. You know, the whole issue around the currency fluctuation, cross-border transactions, with what is happening in the world, at least in our part of the world, there are refugees, cross-border relationships. How does blockchain and stablecoin can help this? I mean, we are seeing that. Will we be able to address that through regulation or not? We don't know. So I think this is what we have seen in regulations. Payment is there, but the payment alone cannot work. I mean, there has to be other regulations on top of it as well.
And what would those regulations be, Khalid, if you were to talk about one or two of those?
So, for example, as I said, digital signature law, because it affects, so why I say that, because it affects the customer journey. It reduces the touch points with the client, number one.
Right.
Payment is another one, which has to be there in order for other things to work. Then we have digital invoicing law. So, for example, if someone is doing embedded finance, their ability to issue a digital finance will also enhance the customer journey. If that law is not there, we are still on the old-fashioned PDF or scanned versions of invoices. The data is not fully captured digitally. It is not legally enforceable. Any private sector lender coming in will not have that comfort that I can do that. So I think these are the two laws which I can think on top of my head.
Great, thank you, Khalid. Mudassir, one of the questions that came up from the audience, and which again is a very important one, and it goes back to affordability. The promise of digitization is data and data mining. So how can data mining help us bring down a cost to the end user, ultimately, because that's really what we're wanting to do when it comes to affordability. What's your take on it, and what has your experience been regarding this? And it'll be nice to hear about your SimSim experience also earlier on in your earlier life. How did that pan out?
Thank you, Rushane. So basically, as they say, data is the new oil. Increasingly in our business, what we are learning is that the payments are actually moving towards near zero pricing. So there is very little money to be made in the payment business, and the monetization of payment happens by using the data in other use cases and through partnerships. And depending on which business model you have, if you're aspiring to become a platform, this is how you monetize the data, through loans and through selling other financial services, etc. So now the opportunity here is that make payment as a base layer of use case, which is available to every user, regardless of the kind of device they have, right? Which pretty much is happening in Pakistan. And then on top of that, you encourage them to use that device for payment use cases, and through that data, give them affordable financial services. So that's the model. And because you don't have distribution cost, because you're not relying on brick and mortar, so you can pass on that advantage of low cost again to the end user. So the pricing of insurance and pricing of savings goes up, insurance comes down, lending rates go down. So all of this is actually happening as we speak. And I think it can happen much more efficiently if everyone understands what is their role in the ecosystem. Because right now we're still sort of like in the early stages. So we want it all, right? So if I'm a payment player, I want to lend also, and I want everything on my balance sheet because I want all the spoils for myself. If there's another bank who's not in the payment business, they don't want to, come on top of us to give their users to us for payment. They want the payment business for themselves. So I think we will go through this maturity curve. And once we all understand our roles, at how we need to collaborate more and essentially create user value at a lower cost and move it to the end user, this will all happen through data, in a nutshell. And my SimSim experience actually taught me a lot of mistakes in terms of that, how, if we think that, if you build something and they will come, this is not how human behavior changes. So changing human behavior is very, very difficult, and it takes a village. Everybody will have to come together to build ecosystems.
That's right. So coming from the village, I think going to data, one of the downsides of data, Maria, is the fact that this opens women in particular to cybercrime, hacking, all those aspects that expose them. And that has been, research has shown that has been one of the reasons why there hasn't been an uptake of women in terms of ownership of phones and in terms of internet access. So how do we overcome that? What's your experience with that, and how do we overcome that? Because at one side we are saying data is the new oil, but on the other hand, there has to be ethics and protection and privacy laws to make sure that the end user is protected, and in this case, women.
Yeah, this is something we see all the time when we go into the field and ask the women why, what do they use when they go to a shop, a typical for their easy loads? What kind of services do they ask for? And first of all, they'll tell you, we send our male member for it. Or the second thing they'll tell you is when we do go, we prefer getting a voucher code from them rather than sharing our phone number. Because they are afraid of these unsolicited phone calls and these obnoxious text messages and harassment that follows. The number gets leaked out. So with something so simple, when they're so hesitant to give out their information, it becomes a big question. How do you solve that problem with becoming more financially inclusive, giving more data? One thing that I've seen is that why it's so important for us to create these female agents and female retailers with OneLoad is that it solves that problem. They feel more comfortable reaching out to a female agent than a male agent. Also, the whole model of OneLoad, the reason why we focused on the retailer rather than on the end customer going B2B was because, these in these low income areas, that retailer probably has been there for generations. They have, clout, they have, respectability, or they are known by that neighborhood. So when a female agent from that same area starts selling these kind of financial services, she's trusted more by the people of that area, not just by the women, but everyone, because she's someone known to them. She looks like them, speaks their language, and practically probably grew up in front of them. So trusting her becomes easier. And I feel, this woman-to-woman interaction in the financial inclusion, gap, that is important. How we crack that, it's something we are working on, and we hope that more people join that space.
So this sounds like Kush's journey, Maria. We initially started with a women-to-women interaction, but with time, because we needed to scale up, we also started hiring men. So then the institution became the trust factor, not the individual who was, whether it was, not the gender of the individual who was providing the service. But
Absolutely.
It's interesting what you're saying. Khalid, over to you. I mean, since you talked about the digital divide in the Middle East, how is digital literacy going to help in all of this in terms of enhancing women's access? What do you think needs to be done on that space?
I think the way we see it is, our approach is looking at two different segments. The new generation is much more aware, and their rate of adoption is much more than what we see on the traditional segment. I think that the question is broader and perhaps has two sides. Digital literacy is one side, and when we come in as a financial service provider, financial literacy is another. And I think we should, I cannot think of a use case right now, but I think what we can do is through this digital is to enhance the literacy on the financial side. Because the digital literacy, when a private sector player comes in, when a fintech comes in, they try and identify one problem and then they solve the problem. And then they go, and there is another fintech which will solve another problem. So I think the business solutions will come in. The financial literacy question stays. For example, where to find a loan, access to markets, what is the fair value to sell they produce. We saw one such case in Egypt where, not by design or by intent, it happened that they have over 70,000, if my number is correct, approximately 70,000 merchants on their platform. And, I think over 3/4 of them are women. Just because they give them access to, fair pricing, they give them access to logistics, trusted logistics, they give them access to, painless payment infrastructure, and they have 400, 500 digital sellers on one side and 70,000 merchants on the other side. I think financial literacy problem stays. I think the digital should be able to solve this problem if using the new tools. But I think the problem in the new segments is very different from the older segments. Older means, our generation. We are obsolete. And the new, I mean, there are researches and there are business models now being done to come up with specialized financial institutions for millennials and Generation Z. You know, how does the saving product look like for this segment versus the old segment? I think it's a financial literacy question. The second thing which we have to see, which is very disturbing, at least in Middle Eastern market, is World Bank data also says 2% of the founders are women in the fintech space. So, you know, if we try to do that, we try to find models which are, you know, women-centric by business model. I mean, we were not looking at the women founders, but we were more looking at, you know, what problem they are trying to solve. I mean, there are only very, very few, and you really don't find that. So I think you asked this question of the regulation earlier. I think there has to be incentive, and you know they are doing incentive, but perhaps they are not enough to enhance that part also. But we see a lot of young women coming from the tech sector, and this is a question which I don't have answer to as to why do they not see the problem. And I think maybe some of the other models like OneLoad is very interesting to hear that. We should have these women-centric models which should try and address a specific question in a commercial way, and then others will see that.
Great, thank you, Khalid. That really wraps up our session today. Thank you to all the panelists for their excellent interventions. This was really a great panel to be moderating. My job was made very easy. So I'll just quickly wrap up some of the caveats that we heard today. For one, we all agree that to enhance or overcome the digital divide, technology is not enough. Even if we throw the technology out there, unless we work on the human-centered side of it, unless we work on the empowerment indices, the access matters, we won't be able to, to come up with a solution. The other thing is, of course, we all talked about this and we heard it from all the panelists, is that we need to design more women-centric products. And this would really, and the interesting issue we heard today was that age matters. One of the researchers that I came across recently, said that the older you are, the more informal your digital literacy will be. So you learn from others, you learn from the youth in your family, and that's how you learn to use the applications. But when we go down the track, if you're talking about the younger generation, the product nature will be very different. So we really need to segment the market. Technology stacks matter. What we heard from Mudassir was that the whole platform approach is very important. The integration, the aggregation, the data mining, all of this is part of it. And the ecosystem is what we need to really build on. We heard from Khalid that regulation matters, and regulation has to be broad-based. It's the beginning, it's the foundation, but even that's not enough, because we need to have the providers and the fintech solutions out there to help man that and to help process that and take it forward. We heard from Maria that it's important to have women-to-women interaction if we really want to if we want to build the trust, if we want to overcome the constraints women face on a day-to-day basis when it comes to mobility, when it comes to cultural constraints, when it comes to access. And those can be drivers for future change. However, we all agree, and we heard that from most of the panelists, was that the business case for this needs to be determined. If we need to massify this, the only way it's going to happen is if there is a business opportunity, whether it's a social entrepreneurship approach or whether it's a full corporate approach that we heard from Mudassir and Khalid. But on all the scales, we have to make it sustainable. We also heard something very interesting from Khalid, which was the first time I had come across this, and thank you for sharing that, Khalid, was the broken legacy model, which is basically saying that technology adaptation is faster, and that's again something that would work logically where there isn't an existing system, and you will see a greater adaptation in those markets. The case you gave of Iraq, so maybe Mudassir, we need to do some diffusion and we need to do some, we need to change the way we look at technology in Pakistan and maybe start fresh. The other thing we talked about was, of course, that data is important, but we also need to talk about the protection of rights in terms of the users as well. And that is another important piece that we need to be aware of, especially when it comes to access of women. So on that note, thank you very much to each of the panelists for your time and your interventions, and I hope to see you again soon. Thank you.